Hey everyone, and welcome back to The Explainer. Today we are digging into a genuinely fascinating roadmap, the Jack Explains Money Strategy Guide. Look, if personal finance has ever felt, just a bit overwhelming, this guide offers a really refreshing, highly structured approach to finally making your cash work for you.
Okay, let's dive into this. What actually makes a winning money strategy? Why do some financial plans succeed so brilliantly, letting people build massive wealth over time, while others just leave people feeling constantly stressed out, restricted, and honestly, a bit confused? Well, it's usually not about how much money you make, it's really about the framework you apply to the money you keep. Jack's strategy guide argues that winning with money comes down to three core things: clarity, structure, and execution. So, to get us to that clarity, here is our quick roadmap for today's explainer. First, we'll be decoding Jack's strategy guide overall. Then we're going to break it down into three distinct sections. Pillar 1, which is the foundation, Pillar 2, the action, and Pillar 3, the future. And finally, we will wrap it all up with your ultimate financial playbook.
All right, kicking things off with Section 1, Decoding Jack's Strategy Guide, the roadmap to financial literacy.
So the guide is completely designed as a step-by-step progression. It's built to take you from a total novice, someone who might be completely intimidated by the stock market, all the way to a confident financial strategist. You absolutely don't need to know everything on day one. You really just need to understand the sequence of the steps. The overarching strategy is systematically broken down into three specific pillars. It's kind of like constructing a house, right? You literally cannot put on the roof before you pour the concrete. So the guide separates our financial journey into the foundation, the execution, and the long-term vision. We're going to tackle these one by one so you can see exactly how they lock together to build a completely unbreakable financial architecture.
Moving right along into Section 2, Pillar 1, the foundation, building your financial baseline.
Before we even think about opening accounts or picking assets, we have to get our mental model and our daily cash flow right. Because if this baseline is weak, honestly, the whole thing crumbles. So we have to start right here: compound interest. Now, what's really interesting about this slide is how this simple definition is the absolute engine of long-term wealth. It's often called the eighth wonder of the world for a reason. It's the concept of earning interest on your initial investment, and then crucially, earning interest on the accumulated interest from your previous periods. It's literally your money making money, and then that new money going out and making even more money. Understanding this deeply is what shifts your entire mindset from just working for your money to letting your money work for you.
But hey, to actually use compound interest, you need capital to invest, right? Enter the famous 50-30-20 budgeting rule. The guide uses this as the foundational baseline for organizing your cash flow without driving yourself crazy. Here's how it breaks down. 50% of your income goes to absolute needs, so housing, groceries, utilities. 30% goes to wants, so yes, you can absolutely still buy that overpriced latte without feeling an ounce of guilt. And then the vital 20% goes directly to savings and investing. You see, a good budget doesn't mean eating rice and beans every single night. It's really just about intentional allocation.
All right, Section 3, Pillar 2, the action. Moving from theory to execution. Now we are shifting our focus from the theory of the 50-30-20 rule and compound interest over to actual real-world implementation. This is where you finally get off the sidelines. The strategy guide makes a crystal clear distinction here between saving and investing. Saving protects your cash and carries very low risk, sure, but over time it actually loses purchasing power due to inflation. Investing, on the other hand, is specifically designed to grow your wealth and beat inflation over time, even though it does carry a higher risk. You definitely need saving for the short term, but you absolutely must have investing for the long term.
So how do we actually do that? Well, the guide lays out Jack's chronological, step-by-step advice for taking concrete action today. Step 1, build an emergency fund. This is your safety net, usually about 3 to 6 months of living expenses just sitting safely in a high-yield savings account. Step 2, open a brokerage account. This is basically your portal to the financial markets. And step 3, automate your monthly contributions. Guys, this is the secret sauce. By automating that 20% we talked about earlier directly into your investments, you completely remove human emotion from the equation, which is vital because humans tend to panic when markets dip. This way, you invest consistently, no matter what the market is doing. Next up, Section 4, Pillar 3, the future, long-term growth and allocation. So with the automation running in the background, we can look ahead to managing expectations and structuring a truly smart portfolio over decades. It's all about zooming out and looking at the big picture here. So the crucial point is this number. 10%. This represents the historical average annual return of the stock market over the last century. Now, it's not going to be exactly 10% every single year. Some years it's up 20%, some years it's down 10%, but historically, it averages out to roughly 10%. This highlights exactly why patience pays off. You don't need to chase wild, speculative, get-rich-quick schemes. You really just need to capture the market's historical average.
And the math behind that patience is just amazing. Notice how the growth from year 10 to year 30 isn't a straight line. It curves upward exponentially. That right there is compound interest in action. The longer you leave your automated investments alone to capture that historical average, the more violently your wealth snowballs. The real heavy lifting is done in decades 2 and 3.
Let's move to and see how this builds. So, how do we capture that growth safely? Well, the guide treats asset allocation kind of like building a sports team where different assets play very different roles to balance long-term growth with safety. Stocks carry a higher risk, but their role is pure growth. Bonds carry a lower risk, and their role is stability. They act as a sort of shock absorber when stocks dip. Real estate sits at a medium risk and provides great diversification. A winning strategy isn't about throwing all your money into one risky basket. It's about blending these asset classes together so they balance each other out over time.
Finally, Section 5, your financial playbook, putting it all together.
Okay, we've covered the foundation, the execution, and the future. Synthesizing everything we've learned from the guide today, here is the ultimate playbook you can apply to your everyday life right now. Master the 50-30-20 budget so your daily life is covered without ever sacrificing your future. Prioritize compound interest early because time is literally your greatest asset. Automate your monthly investments so you never ever forget to pay yourself first. Balance your risk through smart asset allocation using stocks and bonds. And finally, stay consistent for the long term. This matters so much because it transforms financial anxiety into financial inevitability. If you follow this playbook, the math absolutely works in your favor. And this brilliantly illustrates the ultimate lesson of the strategy guide. Time in the market is more important than timing the market. It means you do not need to be some financial genius who perfectly predicts when stocks will go up or down. Trying to time the market is basically a fool's errand. What actually matters is simply putting your money into the market consistently and letting time do all the heavy lifting for you. We've laid out the entire roadmap. You have the blueprint now. You know the foundational mindset, the exact steps for execution, and the long-term reality of compound interest. So I want to leave you with this final provocative question. What is your very first strategic move going to be today? Are you going to sit down and set up that 50-30-20 budget? Are you going to automate your first 20% into a brokerage account? Whatever it is, don't wait for tomorrow. Pick one action from this explainer and just execute it right now. Thanks so much for joining me on The Explainer, and I'll catch you next time.